we know that Adonoloa Limited, the company, had £8.8 million sat in the bank. Hi everyone, it's Sam Newton from Gravitate Accounting, and I'm going to take you through doing some research on Companies House. So by clicking through to Companies House, you can quickly get to this get information about company page, and we can start the process now, and you can search for UK limited companies and LLPs, to be honest. So today we're going to look at Adonoloa Limited. So Adonoloa have been in the news recently due to the success, and they've had a really successful raise. And yeah, so let's have a look what their company house records show about that business. And we're going to have a major focus on when they were an SME, because that's the kind of businesses we look after. So we're not really looking at audited set of accounts, just businesses just below the audit threshold. So the last time they filed a full set of accounts, so you can see here up to March 2024, they filed a detailed set of accounts with 37 pages. So we're going to look at, okay, what's available on your business and what can we tell about that business? So you can see firstly here, so the company's year end was March 23 and they filed their accounts by July 23. So what I would say there is, so they've filed their accounts with a fairly quick turnaround. Our aim is to do them turn our accounts around with a 3 or 4 month period. So they're looking around that time scales, and typically speaking, probably they've had a good year. They want to show those results. So we can click into those accounts, and let's have a see what we can see. So on the face of it, you've got the covering sheet and some contents. But this is a main page that people will be able to see on from a full set of accounts. So what's happened with the business? So you can see they've made significant investments in fixed assets. So intangibles, these can be things like website, they can be things like patents and things like that. So assets you can't touch. So that's grown significantly year on year. And likewise with tangible assets, so likely to be things like fixtures and fittings, machinery to sort of manufacture these products. Again, they've invested, but the significant investments come in those intangible assets. Then we can see the stock figure, so then that's grown 5 times, which is obviously a really positive sign that the company is trading really well, especially when we see that the debtors, so the people owe their money, has trickled down to that bottom line figure there. And then no other clearer tell of how companies performing than the cash at bank. So as at the 31st of March 2023, we know that Adonoloa Limited, the company, had £8.8 million sat in the bank. So you've got to think about that from your perspective as a business owner. People can see on that specific date, not on the first of the next month, not on 2 days before, but on that specific date, they can see exactly what you had in your business bank account. So it's definitely one thing to be aware of, and the strategies you can put in place to protect that essentially. So we sort of see scrolling through, so obviously we've seen a massive increase in current assets, but also an increase in the liability. So they've gone up from 1.6 million to 8 million, but clearly we've seen the assets grow at a far quicker rate, which again is a real positive sign about the business's performance. We can quickly see that, so this is amounts falling due after more than 1 year, so have typically liabilities, and we're saying, okay, what did the company owe over a year? So example, it looks to me like probably a bank loan. They might have taken out a small loan that was payable over 4 or 5 years. They can see they've paid 10 grand of that down. So again, a lot of this is quite common with bounce back loans where they've borrowed 50 grand and they're chipping away at 10 grand per year. But what we're seeing here is that this company, Adonoloa, have managed to achieve this significant growth. So the balance sheet has grown by 6.7 million. So what we're talking about there is the company's made a turnover. They've had the cost of sales, so all the stock to sell the garments that they produce, all the expenses, and that gives them a net profit before tax. Then off that, they've had both tax and dividends to be offset against it, which has left them an increase in their profit and loss account of £6.7 million. So, like you say, an incredible year for that business. Then we can go a little bit further into the accounts to see some more detail. So we're looking at intangibles. Like I say, we don't get a whole lot more information. Let's have a look, see if it was like so in the notes. It's sort of just referring to as other intangibles. So we don't get the specific detail, but they're clearly developing for the longer term. Intangibles tend to be something that is an investment for the longer term of the business. Then we've got the tangibles themselves. So like we say, you can see they are investing in things like fixtures and fittings. They might be kitting out new offices and stuff as they continue to expand. Plant and machinery, again, making that the process of building the business more efficient. We mentioned the stock earlier, so that's gone up 5 times. But given the growth in the business, you can sort of see the trade debtors has also increased by a similar amount. But as we can see, that's clearly dropping down all the way to that profit after tax figure, where we see is increased by £6.7 million. So clearly, it's that we can see on this example, they're not chasing debts or anything like that. It is a business that's growing efficiently. Then you can look at trade creditors, and again we're seeing that same similar pattern, 5 times increase in creditors, so they're increasing in line with one another. Taxation and social security, this is another line that people will typically look at to try and get a bit of a tell on the business. So included in that number, I would be guessing, but I would expect there will be corporation tax. So like you say, looking at future numbers, the audited accounts on this, we know that the company paid £1.6 million in corporation tax. So of that balance, 1.6 million is corporation tax, but the other taxes that will be growing is VAT, because obviously every quarter as they go on, the company is growing, so their quarterly VAT bill will also be increasing, and also pay as you earn national insurance, so payroll taxes. So what this company will be doing is be withholding some of those payroll taxes to allow them to then pay their staff. So again, that 3.5 million will likely to be the combination of those 3 taxes. We discussed it earlier, but like I say, they have got a bank loan, likely to be an old bounce back loan, just thinking about the timing of this and the fact it's coming down by roughly 10 grand a year, but it looks like they will probably will have roughly borrowed 50k and they're just paying that down. It's cheap borrowing. There's no harm in keeping hold of that as a business owner. If the borrowing was increasing, that's when you'd start to question some numbers, but like I say, when a company's performing as well as this company's doing with its bottom line, I wouldn't say it's a huge worry at all. And then again, another piece of information you can typically see on the set of accounts is if people, so where the directors have loaned money to the business. Mr. Cook has lent, at the start of the year, he had lent the business 85k. By the end of the year, he'd put in significantly more funds, about another £500,000. But again, I'm sure he'd be pretty happy with his investments. So yeah, that's a quick review of how I will be looking at a set of accounts, and obviously amazing to see such successful businesses coming out of the UK. If anyone has any questions about this business or any other businesses, or wants to know how me as an accountant will be reviewing your numbers, feel free to reach out, and I'd love to go through it.